Yeah, hi everyone. So today our session is on ICR. We have Prasenjit as our speaker. Prasenjit is having 16 years of experience in finance, taxation, treasury, and corporate accounting. He has extensively worked with global giants and conglomerates as ERP consultant, especially SAP. He is certified expert in finance management and treasury consultancy in myriads of industrial and functional domains like automobile, power, and manufacturing. So today our session is on intercompany reconciliation process, a major challenge in financial accounting and close. So let's hear from Prasenjit a detailed perspective of that. Prasenjit, over to you.
Thanks, Bunun. Hello, everyone. Good evening.
Good evening, sir.
Yeah. So on a weekend, Saturday, I'm taking the session. I hope the session will be useful and fruitful to you, and the time will be like you will uh, identify it as a utilized time. I hope. So as already introduced by Moon. So yeah, I have a overall a good amount of knowledge and experience right now in multiple areas, and it's very essential to share the knowledge and whatever we learned till now with everyone, whoever is interested in those areas and all. It's not like about the knowledge or experiences, the goods and bads and all, so that we cannot or we should not repeat the same things again and again, and some innovative things can be done here. So as mentioned, I worked in different types of areas, specifically in corporate finance, the accounting part and all, mostly in the functional side, as well as obviously supporting the technical sides also. And the thing is, like, as the today's topic is intercompany reconciliation, is it's, you can say, in the vast sea of finance and accounting, this is one of the part, very critical part for corporate finance, where it is very much needed and essential for preparing your financial reportings and your like, obviously when you are doing the group reporting, I hope you are aware of a bit of group reporting and all, for an organization or a group. So for a group reporting, when you are preparing the consolidation and all, so intercompany reconciliation is a very important part to derive all those things. So without going much deeper into that, let me just first share my screen. I will go from very basic, and whenever you will find anything you want to, like, you can pitch in to ask any question, or we can take the question answer session at the end of the presentation also. Okay. Yeah, let me know if
Yes, Prasenjit, it works. Go ahead.
yeah, I'm sharing my screen. Let me know if it is visible to all of you. Is it visible?
Yes, sir.
Okay, so let's start. So see, most of the intercompany reconciliation at its bits, you already, everyone, you are aware of the things. But yeah, for to be everyone in sync, I will just give a brief introduction about, or you can say the brief idea about intercompany reconciliation, and then we can discuss about the uh, different types of challenges, the bottlenecks. Then we can discuss about the existing systems which are running for intercompany reconciliation, what are the limitations or what are the way they are operating right now. And then we can think about, or you can say, like, discuss about the innovations which are right now going on in the area of intercompany reconciliation, or any concept which we can innovate or implement into this area for better performance and better process improvements there itself. Okay. So the beginning, the concept we need to first understand that what is ICR, or intercompany reconciliation. So as I can see that it's basically a process of ensuring the transaction balances and activity between two or more subsidiaries, or it can be a department also. So it depends. Like, if I consider an example of a group of companies, let's say the sister concerns, I can consider. So so is it the prerequisite? Yeah, one of the factor is you should be you should operate in a group company mode, definitely. And the second concept is, or you can say the second condition is, definitely those partners, or you can say the group companies, should interact with each other from business perspective. Like what do I mean by business perspective? It's like sell from one company, purchase to others, or that kind of. So basically the transactions, the business should happen between the entities. Only then, definitely, if there are transactions and businesses are going on, there is a need to reconcile the transactions to settle down the things. Because when you are preparing the group reporting, obviously you will not you need to basically report your transactions or your reporting from the external agency's point of view. Like, if there is a party which is external to your organization, it's not a sister concern, or it's a within the group company, it's a third party, any supplier or any customer, and you are doing the business. Only then, definitely, if you are doing a business with a customer, you are providing any goods and service, and in for that purpose the customer is paying you, you are like, it's a revenue for you, it's a receivable for you. Definitely you will report that, because based on the revenue only you will derive your profit or loss, whatever be. Similarly, if you are purchasing something from a party, a supplier, a vendor, a contractor, so whether it's a service or it's a goods, so it's a purchase from your side, it's a liability, it's a cost, you need to report that also. So those are reportable things to the external world, your financial statements, financial health, everything. But intercompany reconciliations, definitely it's also a nature of sales and transactions, but those transactions are actually your internal transactions, to be honest, internal to the group, not the company, but within the group. So when you are preparing the group reporting there, so definitely the prerequisite is you need to prepare the intercompany reconciliation reports. You need to eliminate those, because those are not relevant for group reporting, for preparing the consolidation and all. So ICR need to be eliminated. So that is a, you can say, the much advanced part. But before that, first we need to prepare intercompany reconciliation, which is very much essential. And how that can be prepared, how you can do the identification of the transaction. Suppose you are doing millions of transactions in your organization. Think about from a perspective of organization. You are doing different types of a number of transactions there: sales, purchase, transfers, and you can say like you are lending and borrowing the loans and all. It could be any kind of transactions are there. Okay, so foreign exchanges and all. How you will identify from all those millions of transactions that this particular transaction is of intercompany nature? You need to first identify that also. So identification of the uh, business entities definitely is needed. Either it could be your group company, one of the group company, or it is a external party. So first of all, that identification is very much important. And after this identification, when you are doing the transactions, based on that identifications, segregation of the transactions are very much important. Okay, then only it is the very first step, that whether it's an intercompany transaction, identification of the transaction, whether it's an intercompany transaction or it's a regular transaction, you need to identify. From there only you can start your journey for this concept. Once the transactions are identified, after that, now there is a need of reconciliation, and then there is a need of, in the final stage, of reporting also. Why we are doing reconciliations? Definitely in finance, it's completely record to report process, R2R. You need to record, you need to tag, you need to segregate, identify, do the reconciliation matching, and then finally you need to report that. So that is more or less the concept in intercompany reconciliation also. So, and yeah, it's a part of the activity for preparing the financial reporting. It's part of your ensuring compliance, and obviously preventing the discrepancies there also. Because if you are providing the accurate information, if you are doing the reconciliation accurately, only then you will get the correct financial results and reports there, which is very much needed. Now, what are the you can say like the concept is very much okay. Like, we need to identify, we need to match, and we need to report. That's fine. But to achieve this simple concept in a complex organization where different, as I mentioned, different types of transactions are happening, the correct transactions, incorrect transactions, the data are different types, and businesses are of different nature. So for example, if I say a very simple model, that there is a seller and there is a purchaser, 1:1 relationship. So you can understand that, okay, it's a very simple kind of a relationship, or simple kind of a business transaction, that someone will sell and someone will purchase. That's fine. But in real world, there are much more layers, much more complexities up there. For example, suppose I can give you one example, that there is a supplier. Okay, they are providing some services, they are processing some, you are a manufacturing company, you are preparing some product. For that product, for a certain level of, you can say, activities on that product, you have outsourced to the this service provider. They are providing some services there also. But within that also, there is a certain, within that process also, there are some steps which is also done by some external contractors for that supplier also. So it is like supplier to supplier kind of a scenario. So multiple entities are now involved. There could be a possibility that because of some regulations and constraint, your product, you are not transferring, or it is not moving outside your premise. So what is the case? You are giving the space or the area to the third party service provider, and they are actually utilizing your area, your resources, but they are providing a certain service to you also. So in that case, imagine the situation, what type of complexities are there, because the area where these activities are happening is your, the product, it is also your, but the service which is actually provided by in this case, is by the third party supplier, service provider. Now imagine how you can identify this kind of scenario, that which exact part is actually related to that third party and which is not related to that. And even in that, add another layer, whether that third party is a group company or it's a regular third party, because based on that you can identify whether it's a intercompany transaction or not. So there, when in a real life scenario, multiple you can say types of challenges, business scenarios, complexities are coming, this concept is getting more or more like complex, and there are multi dimensions up there. So when from a finance guy, from finance point of view, who is doing the reconciliation between two entities, two group companies, they are getting multiple types of challenges for identification, matching and all. So what are the different types of, you can say, challenges? But before that, let's first understand the steps, regular steps, in a very simple, you can say, a simple standardized process of ICR. What are the steps generally we are following? It is more or less the standardized ways, the steps. There are multiple layers, or you can say multiple deviations, multiple another add-ons are there, but these are the standard processes. First of all, as I mentioned already, you have to identify the intercompany transactions, because you could have multiple transactions. Those are of only two types of nature. Either it could be intercompany transaction or it could be a regular transactions. So you need to identify that. Second, gather relevant data. This is also very challenging, because many times we know that in real life, if you don't have any effective you can say like data capturing mechanism or data capturing tool, then definitely gathering the relevant data is very difficult. For multinational organizations where there is a good amount of automation, or you can say the system setups are there, they can gather relevant data or capture relevant data at any point of time, which you can get. But in most of the cases, that is not the ideal scenario. In real life, it could be possible that organization, they are capturing the data manually, and while doing that, they are not capturing all the relevant information because of lack of awareness, you can say, or lack of standardization. They are not aware of the processes, that how it can impact later on in my reporting part. So that way, the gathering the relevant information is a real life challenge. Then verifying the matching entries. So suppose, as I mentioned, I can take a very simple example, seller and purchaser relationship within the group company. I need to identify that I have done a sales transaction or you can say I have done a purchase transaction of, let's say, 1000 USD, and the other party, the group company, he has also, obviously he has done 1000 USD sales transaction in that case. So ideally it should match, that I will show it as my 1000 in my purchase or expense section, and he will show that as in his case as 1000 revenue sales transaction there itself. Ideally it should match, but in most of the cases, in those millions of transactions, it's very difficult to verify and exactly identify and then match these transactions. So that is one of the major activity of ICR, that if there are a pair of transactions, one side it is sell, another side it is a purchase, then I need to identify and tag them, that these are the pair of transactions which are matching from both the parties. Identify discrepancies. Now let's suppose that, as I mentioned, that it's a very good scenario that I have booked 1000 rupees as my purchase, and the other entity has booked 1000 rupees as sale. But it could be possible that you have booked 1000 rupees as purchase, but the other entity has booked 950 as sales transaction. Obviously, there is a discrepancy then. It could be for many reasons. It could be due to some other factors. Let's say you have sent your material. I can say, I am giving you an example of goods point of view. Let's say they have ordered some material or goods from your side, you have provided that. Out of that, and the total bill is 1000 USD. But out of that, let's say a certain quantity has been rejected from quality inspection. So they haven't utilized those a certain amount of a certain quantity of material. They returned that also, and later on that has been returned to my premise also. So obviously they will book, or you can say they will realize in their books amount for those, or you can say the sales for those many transaction amount of for those many materials which is utilized by them. Not all, but I have already booked the complete amount. There is a discrepancy in that case. So that need to be identified also, that okay, these are pair of transactions. Obviously there is a mismatch in amount, there is a discrepancy, but first we need to identify that both are related. If we are not able to identify whether these are related or not, how you will then identify the discrepancies? So identification of discrepancies for the related transaction, related party transactions are very much important. Once identified, then obviously the adjustment of differences. When it is discussed between the parties, the involved parties, so they need to identify, they need to discuss, they need to settle down the things. So it's basically adjustment. Adjustment could be from any side. So it is only decided after the discussion. So adjustment for differences are very much needed. Only then it will be settled down. Once it is done, then confirm eliminations for consolidation. So as I mentioned, for group reporting and consolidations, intercompany reconciliation transactions are not meant for the consolidation and group reporting purpose, because this is internal to my group. Both the entities are within my group. These are not external parties. So we need to specifically identify, settle down, and then eliminate those. Only then we can prepare the consolidations and group reporting. Once it is done, specific to ICR, we need to prepare the reports, because as I mentioned, for any financial activity, anything, the final end result is report. You need to prepare the intercompany reconciliation report, which will provide you the exact, you can say the idea, or the exact picture about your intercompany reconciliation process within the group companies, that how it is happening. Is it like there are 10 entities who are interacting with each other, but primarily there are 4 entities who are mainly involved. 80% transactions are involved within these 4. So those I can say insights should emerge from this intercompany reconciliation reports. Because let's say, suppose I am purchasing something from external party, okay, but that raw material or whatever I am purchasing, or service you can say, it is also prepared by one of my group company. So obviously it should be preferable that if effectively the pricing is also effective and everything is fine, why I will give the business to the external party? Why it should not be given to the group company there itself? So these insights only comes when you will go and check all these details there. So intercompany reconciliation reports provide you such kind of insights also. Definitely after the reviewing the reports and all, you need to do the sign off. All the counterparties need to sign off the things that, okay, we have identified, we have matched, we have settled down the disputes and everything, whatever are there, and now we agreed on this, and we need to finally freeze this, sign off. The authorized person, not only from the counterparties, the external auditors need to sign that also, because obviously any financial information, I hope you all are aware that financial information is actually external reporting. It is external to the world. Whenever we are preparing any balance sheet or profit and loss statement or cash flow statement, everything is meant for the external world. To whom? The financial institutes, the shareholders, stakeholders, any person, any external agencies or any external person can be interested for my financial reportings and my financial health. And I need to, this is a compliance basically, I need to prepare that. The cost reporting reports, the costing sheets and all, those are internal. How much it costs you to prepare a product and all, those are internal for the management. Those are not meant for any external world. You should not publish all those things. But financial reports are only and only for external world, so that you can prepare. So that's why all the financial reports and everything are basically, you will get that all are in uniform standardized forms. You cannot prepare your balance sheet or anything on your own way. There is a certain way, as per the accounting principles, you need to prepare and publish that. So review sign off from the auditors are also needed, so that you can publish those reports. Finally, the regular monitoring and continuous improvement definitely needed. It's not only in ICR, in every process it is needed, but regular monitoring is also needed, that how many types of transactions are happening, what is the volume of transaction and all. So because it is basically, it will help you in your subsequent ICR cycles and all. So definitely regular monitoring and continuous improvements are needed. So these are more or less the standard steps in ICR process, which most of the organizations are following. Apart from this, could be some other add-ons there, but this is the basically the, you can say, the structure which need to be followed. Now, when we are following this entire intercompany reconciliation process, we are getting different challenges and bottlenecks. Already I have mentioned, like the complex transactions, where it is not 1:1 kind of a relationship. It could be 1:many, many:1, many:many relationship could also happen. It could be possible that I am transacting with 3 different group companies for a single transaction. It could also be possible, where it is like you are distributing something, you are distributing a service. Let's suppose you are for example, one example I can give you, a very common example. You are a power generation company, okay? Now, and you have a number of group companies are also there in your group. It's your responsibility to distribute power to different group companies there, okay? Now, the thing is, like, when you are distributing or giving powers to them, it's a relationship with and you are like providing a service kind of a thing, and they are receiving the service. Now in this case, they are the purchaser, you are the seller, but you have multiple purchasers, they have a common single seller. So now you need to settle the scores, or you need to settle the transactions with each of these entities. So such kind of complexities could be there. Or it could be possible that you have provided some material to your group company, one of the group company, to prepare something and send back to you. They, after receiving the material, they have added some services, or you can say provided some services on that material. But even after that, to complete that activity, they further send that to another party. And from in this way, multiple iterations happen, and finally you have received your product, desired product. Now you need to identify what are the activities or what are the value additions done by each of these parties, and based on that only you can identify the transactions. That okay, let's say 20% value addition by group company 1, 30% by group company 2, and rest by group company 3. So that way distribution, how it will be done. So complex transactions are there. You need to capture all those transactions. That is the first and foremost, because if you are not capturing the transactions, the capturing the data, that is the starting point. You need to do that, but it's a challenge. Then timing differences. So everyone, we are aware that the monthly closing activities or quarterly, whatever be, there is a certain timings we need to follow. It could be possible that in a sales purchase transaction relationship, at the month end, let's say suppose you are the seller and the other party is the purchaser. So you have sold from your side. In your books, you have already shown this at the month end that it is sold to this party with this amount. You have already realized that in your books. But that till that time, it is a in-transit transaction. They haven't received that yet at the time of month closing. So they haven't shown that in their books. In that case, definitely there is a timing difference. There is a transaction. Both the parties are agreeing on that. But there is a timing differences. One party already captured the information. Another party is yet to capture, because obviously they haven't received the material. How they can capture that? So that timing difference will occur. Also, it could be possible that for it's basically happened for multinational organizations, where let's say you have an operation in India, you have an operation in Australia and USA, and you have this intercompany relationship and transactions also. So there will be timing difference, because there are lots of in transit, in progress transactions will be there, where one party already recognized the transaction but another party is yet to recognize the transaction. How you can uh, this factor will be there, but even after with this factor, how you can do the capture the transactions and do the reconciliation, that is one of the challenge. Third is manual processes. We know that in many of the organizations still the manual processes are followed, where definitely there is a lack of transparency and communication issue. Like I am capturing one transaction manually, so it's basically completely user dependent, the person who is capturing the information. So what happened that it's is his or her discretion. He has provided some of the information, but not all the informations. And once during the capture, you missed some information, then it is lost. Now, later on, whenever you will do any reconciliation or matching or anything, since the information is not adequately present, it's very difficult to identify what is the purpose of that transaction, which party was involved in it, and all the factors in that case. So manual process, definitely there will be a lack of transparency and communication, because it's completely depending on the person who is capturing the data. Next, data integrity, inadequate documentation and supporting evidences. Now, let's say you have captured the data. In most of the not only manual processes, even for good day-to-day ERP solutions and all, we have found that even if you are capturing the data and all, where is the documentation and evidence? Is there any provision to provide proper documentation and evidences there? Is there any, you can say, system is prompting for asking for the documentation or supporting invoices, or is there any checks and balances for that? No, nothing. It's completely again dependent on the person who is doing the or capturing the transactions. If the supporting documents he is providing, very good. But if it is not provided, then it's a completely loss of the information, because without documents, supporting evidences, how you can justify the things? So data integrity is very much a pain point. Then one of the major issues is decentralized database for capturing and storing data. It's like, for my organization, I am following some ERP solutions and my data is with me only. My sister concern or my group company, they are doing their own way. Now, it's first and foremost condition that when you are trying to match intercompany transactions, definitely both the sides of transactions should be present in a common platform, or you can say a common database. Only then you can match and do the reconciliation and all. How you can do that? Because it's decentralized. Like he is capturing and storing the data in his side. I am capturing my data in my side. So it's decentralized. There is no interaction at all. Now suddenly, at the time of preparing the ICR, what we are doing, we are collating or gathering all the information in a common place. So that is a, you can say, like a additional burden or additional activity which we need to perform to collate and gather all the information in one place, and then after that it will start. So it is basically like before starting the ICR process, this is one of the pain point area which you need to ensure, and it took ample amount of time during that activities, that how you can collate all the informations from different sources. And also the thing is, like, it's not at all necessary that everyone is capturing the data in the same manner. So you will not get a uniform data in a uniform, or you can say a standard way. Then it's also a challenge. Someone is capturing data in some, it's like you are writing something in one language and they are writing something in another language. Now you try to merge all of them. But because both are in different languages, it's very difficult to like identify and merge similar way. The way you are capturing your data, the practices you are following, and the practices followed by your group company could be different. Then how you are expecting that when you are merging the data and you reconciling and all both of them are effectively will match. So this is you can say from technical point of view a great challenge for the people who are doing this, who are trying to provide some effective solution for intercompany reconciliation. For that, now the lack of standardized process across subsidiaries, as I already mentioned, that you are, let's suppose you are following different standard and principles, accounting principles, and you are capturing the data in a proper manner. But that doesn't mean that your group company are also following. It could be possible because, let's say, suppose you are a big organization, you have a good amount of resources, people who can do the proper, who can capture the data in a proper way. Okay, but it could be possible there is a small group company, they don't have much people, and they are doing the way as per their convenience, which is satisfactory for them. But when it comes to group reporting point of view, their data is not adequate. So because the standardized process is not followed across all the subsidiaries, it's very difficult to put all them in a common area and do the, you can say, the matching reconciliation part and all. And last, disparate accounting system. I can give a very simple example for this. Let's say suppose different ERPs are used by different organizations. Let's say suppose you are using SAP ERP solution. Your group, another company, group company, they are using Oracle. Someone is using Salesforce. Someone is using Tally. Now, but you need to do finally the intercompany reconciliation between all these platforms. We all know that data, the way data is present, the way the data is captured for all these systems are different. Now, how you can ensure among these disparate accounting systems that the data, whatever data will come, without any external effort, without any much effort or time wasting, this intercompany reconciliation can happen even when there are different accounting systems and the data generated from all those accounting systems are now with you. So these are the challenges and bottlenecks in ICR process there. So if I consider now the limitations in regular ERPs are basically, you can say, I will say in a very simplistic manner, that your day-to-day transactions or activities you are capturing in your ERP solutions. That is your, you can say, in your enterprise resource planning tool, where other activities are also there. But now from ICR perspective, I can say the day-to-day financial transactions which you are capturing. So now in ERP solutions from ICR perspective, we have different types of limitations. Like, first of all, no ERP solution is bothered about ICR solutioning and all in first place. The main purpose of ERP solutions, or you can say they have focus on addressing different day-to-day activities and processes of the organization. Like, what are the different day-to-days, or you can say regular activities of any organization? For example, financial transactions. For example, HR related activities, hiring, training, salary processing, retiring, promotion, bonus. These are HR process. Then production processes, if it's a production manufacturing company, like my assembly line, my production of different per units of the products, my raw material consumption, my power consumption, the cost of that, these processes. Then if I say sales and purchase point of view, my database of suppliers, my dealings with the suppliers, the contracts, the regulations. With sale, from sales point of view, what are the things? The rebates, the promotions, how I can like generate my revenue, how I can get the receive the payments timely from my customers. All these things are the regular, more focused processes in the regular ERP solutions. So in most of the popular ERP solutions, you will see that there is a lack of built-in intercompany reconciliation features. They have something in that, but that is not the primary process. They don't have any very effective, very you can say rich intercompany reconciliation process or solution within the ERP solution. You will not get that. Then disparate financial data across multiple entities, we already discussed that different entities could have different systems. The way they are capturing the data and all could be different. So it's a challenge. Ineffective data transfer tool and process for data collection. Now, as I mentioned, for intercompany reconciliation, we need all data in a place. So obviously the process is, we need the transfer of data from their source system to my central platform there. Now, excuse me, this is one of the, you can say, challenge or time taking process for transferring the data. In a modern world, with the help of our IT and different types of effective data transferring tools, it's evolved, and it's like you can say better than earlier situation. But still, we need to just think about not only about the data transfer, the transfer with all the required informations, relevant informations. It's not like that you pick something and dump into a central place. No, you need to think from functional point of view also, that data without any proper information is nothing. Data should be with relevant information, only then it will be effective. So there are not effective data transfer tools where with a, I can say, like in a while all the data could be transferred into the centralized system and you can then utilize that. It took ample amount of time, or you can say resources and efforts, to transfer the data and all. So that is one of the challenges. Then lack of automation for intercompany elimination. So as I mentioned, that we need to identify the intercompany transactions, and during my group reporting and consolidation, we need to eliminate that also. A very simple rule, there are complex things are there, but if you say a very simple rule is, first identification whether it's an intercompany transaction or not. Based on that, you can eliminate. Okay, but there is no automation, or you can say automatic rules, where you can just define that it's an intercompany transaction, it's not. If it's an intercompany transaction, it should be eliminated, and if it's a external third party transaction, then it should be considered. But there is no, till now, there is no effective solution, automation regarding that in any ERP solutions. One of the challenges is multi-currency transactions. So there could be possible that your supplier is in, let's say, you are getting some supplies from a US based supplier. So they are billing you in USD. They are sending you invoices for their supplies in USD. You are operating in India in INR. So there is a concept of these multi-currency transactions, the exchange rates and all, time-wise, day-wise, what kind of exchange rate types you are using, what is the, so this will also affect into your intercompany transactions also if it's a deal with your related party. So that is also a challenge. Like at the time of transaction, let's suppose when you are purchasing and they are selling. So when they are selling, that time the USD and INR exchange rate was something XYZ. And after certain amount of time, when you are capturing that as a purchase transaction in your system, that time the exchange rate is different between the USD and INR. Now you are capturing something in on your way, and there will be always be a difference due to these exchange rate differences. How you can eliminate that, how you can cater that, how you can settle those disputes. So those are challenges. Right now there is no proper, you can say, rules, or you can say like ready-made solutions available in ERP to cater these challenges. It's completely manual process, like it's decision between the parties. But there should be something where you can identify, and based on the rules and predefined rules, you can eliminate those factors. Then lack of workflow management for reconciliation. Reconciliation is not an activity of a single person from each of the entities. A number of persons will be involved, like a person who will prepare the data, a person who will review the data, a person who will approve the data, a person who will do the sign off of the data. So there is no workflow management. I have told you a very simple structure, that there will be a preparer, there will be a reviewer, there will be a approver, and there will be a final sign off and then audit. It's a you can say sequential, but it could be more and more complex also. Where is that defined? You can say the workflow where I can identify that, okay, in my group companies, when ICR will be performed for each of these entities, how it will flow from which person to which person, or you can say which role to which role. And if it is accepted, then how it will go. If it is you can say rejected or returned, then how it will go. That is not at all clearly defined or inbuilt given in any of the solutions there. Then lack of real-time reconciliation. So in ERP solutions, how this trivial process is happening, that for entire period, entire month, entire quarter, you are just capturing the data. Nothing need to be done for ICR perspective, nothing. You are just capturing data. Now, when this period end is near, when the activity for ICR will start, from there now you are one by one like identifying and starting the process of that. So it is not like that at the very first day you are doing anything related to ICR. It is like data capturing. So there is no real-time reconciliation is happening, because you are just data capture. So there is an entity, company A, there is a company B. Company A, from the very first day of the month, they are just capturing data without thinking about anything, only from their perspective. Company B is also doing the same way. And at the end of the month, now they have started doing this reconciliation activity at the end of the month. But if there is a real-time reconciliation process, that A will capture their data, which is a business related to B, and B is also capturing his leg for the same transactions, automatically at that time only, at that time of capturing the data, it will auto-reconcile. There is nothing right now. Or if there is any solution, it's very in a initial stage. No, not very effective. And last and foremost, the limited reporting. In any of the ERP solutions, there is nothing standard ICR reporting kind of a feature available. So for ICR, after doing all the intercompany reconciliation and all, there is no standard reports which can be generated automatically. It's completely now depend on the entities, how they can design. They are based on the requirement. Now they are customizing and doing the things. Why there is no standard reporting things and all? And not only just reporting from the point of view just for publishing purpose. It could be possible that during the reconciliation process also I need a you can say progress bar or status bar, where I can get how much reconciled, how much yet to be reconciled, how much is unmatched transaction, how many transactions are automatically matched. Where is that report? Nothing is there. So it's very limited. Limited reporting is one of the key, you can say, critical thing, because finance without reporting is nothing. You need to, the end result is reporting. So these are some of the limitations in regular ERP solutions, which till now, at least in my, you can say, like for last 15 years, I have seen that in ERP solutions, they are more focused about capturing the data and addressing different business processes of the organization, but not very much related to the intercompany reconciliation or group reporting. They are not very much into that. Now, from there, as a IT guy, we need to think about the innovations in ICR processes. Like what types of things we can do or we have already achieved. We need to think about that. We need to implement those things also. So if I say like some of the key features, there are lots of innovations. Even to be honest, I'm also not aware of what are the different innovations are going on in the real world. But some of them, the very popular one, which we have seen, I have seen in organizations which they are trying to leverage and implement, are some of the things. So we can discuss some of the innovations in ICR processes. One of them is like automation and AI-driven reconciliation tools. So obviously, there are, as I have mentioned, that it's a repetitive process. ICR is not a single time process. It is a periodically you need to do the things. So obviously, there are a number of processes will be there where it's a repetitive in nature, you can say, or there is no much decision-making things are there. Okay. So those are the things in very first place are the, you can say the activities which can be automated easily, I can say, which without much effort. And then for the things where it is like there are some decisions are involved, or then obviously we need to do some AI driven reconciliation tool development and all, where based on the AI powered reconciliation tool, automatically the intercompany matching of the transactions will happen. And even if the discrepancy is there, that also can be detected. There is no need of any financial persons to check those transactions, and then they can say that, okay, there is a discrepancy, we need to address this. Why? If there are certain factors which you can say like drive this discrepancy, based on those factors we can identify the discrepancies. Why those cannot be identified by AI driven tools? It can be possible. So for example, AI for matching transactions, like with the help of AI and ML, machine learning algorithms, we can automatically match the intercompany transactions between the subsidiaries, and with the rules, predefined rules, the patterns based on the transactions history also. We all know that based on the historical data, the AI tools can read those data and can identify that, okay, this type of transactions are coming. From that, the learning is how we can utilize those old pattern of transactions or the way the transactions happen, and then we can do some prediction there, or we can improve the matching rules. Basically, there are a number of matching rules you need to define for different automatic matching. So, and that those matching rules can be improved with the help of AI, right? And obviously, it will be accurate over the time, because day one in any organization, when they have started capturing the data, whether it's manual or automatic, day one, the quality of whatever be the quality of data, and after 5 years, the quality of data, there will be a drastic change. Data will be captured in a more accurate, the accuracy will be increased with the gradually with the time. So with the improvement of data, my process will also be refined, my learning of the system will also be refined, and based on that, my automation will also be increased more and more. So first of all, let's say suppose I am doing very simple transactions, I can automate that. Sales purchase, something like that. But when my data is accurate, when my data is with proper evidences and all the relevant informations, I can think about more than the sales and purchase transactions also. I can think about the you can say the as I mentioned, the exchange rate transactions, I can think about the loans and advances between the inter company parties there itself. So those transactions also can be think about. RPA is basically we are already doing the things that if we are doing some transactions in a repetitive manner, we know that there is no much decision making factor is there. Definitely those things need to be automated with the RPA tools and all. If we know that only this way, for example, invoice capturing, purchase invoice capturing, you know the party, you know the, for example, so let's say suppose they have your supplier or third party service provider has provided the invoice to you. All the relevant information is already provided in that invoice. Why it is needed that somebody manually capture that into your system? Why we cannot utilize OCR to read the relevant information and capture the data automatically into the system, and not only for one or two transactions, for all the transactions? I have the relevant information, I read the data from there, and I capture all those informations, and automatically my invoice creation part is, there is no manual intervention. I can automatically create the invoices, so my effort will be less there. Some of the things in real world, like I hope you all aware of that one of the global leading tool for intercompany reconciliation is Blackline. So Blackline has integrated AI driven tool for matching and reconciliation of the intercompany balances, which obviously will reduce the time and effort. Okay. Similarly, Trintech used machine learning to improve the accuracy of intercompany matching and detect anomalies in transactions. So it is not like that these products already implemented some of these things. That doesn't mean that other solutions or other developments cannot be cannot implement these things, because we know the concepts, we have the idea. If you are aware of the process, if you know the data, and if you know the concept, why it cannot be done? So it can be done. These innovations can be implemented there. Next, cloud-based intercompany reconciliation solutions. So leave apart intercompany reconciliations. Even for data capturing process of your entire activities, the regular ERPs in fact are moving to the cloud-based solutions now. So many organizations are migrating to cloud-based financial systems. In most of the leading organizations now, you will learn that they went for the cloud-based solution. It could be like their private cloud, or it could be hybrid cloud, but they are going now on-premise resources they are not using at all. So one of the advantage from ICR perspective, I can say you that it will help you for centralization of the reconciliation platform. So let's say suppose in my group company, I am company A, there is company B, there is a company C. Till now, we were using on-premise solutions, ownership based. But now I am migrating to cloud. So if as a group, we take a decision that we will, all the three parties will be involved for a single cloud service provider. So all are migrated to a cloud. Definitely, it could be a you can say a cloud which is common to all, but there is a segregation. Obviously, there is a data confidentiality that my transactions will not be visible to them. So that confidentiality we can ensure. But from ICR point of view, because now all are in a centralized reconciliation platform, if I am tagging one transaction as ICR, my collating of data, or you can say transferring of data activity, is now reduced. That activity is completely eliminated, because now I have a centralized platform where already transactions I can easily identify there as ICR transactions. If I tag them that this is ICR transaction, and you can put that in the centralized platform, only that will be present there. Then automatically all the ICR related transactions for all these entities will be present there. So cloud-based intercompany reconciliation solution is very effective approach. And then remote collaboration is another way. Like we know that it's not possible, and It's not possible that for a multinational organization or a group of companies where it is present in different zones, for reconciliation purpose, it's not possible that everyone will come together and do the things there. For it could be a remote collaboration where people from different locations can collaborate in real time and make it easier to resolve the discrepancies quickly, because even after collating the data and doing the initial reconciliation, there will be dispute and discrepancies between the transactions. I am saying that this particular transaction where I am the purchaser, I am the seller, it's 1,000 rupees, and that company B is saying that they are the seller. No, it is 950. So if such type of discrepancies are coming where you are not able to justify that, then there is a need that both the person will come together, discuss and resolve that dispute. How it can be possible? Through remote collaboration. If it's a cloud-based solution, data is already there, centralized platform is there. You just need to, like, you are logging into the same system, they are logging into the same system. You are seeing the same information real time, they are seeing the same information in real time. Both of you are in common platform, checking the common data, discussing on the common thing, and then resolving the dispute. So it's very much effective in that manner. So as an example, I can say, like, since I have also worked in this, like SAP S4 HANA solution, for it's now on-premise was there, but definitely most of the organizations are going for the cloud solution of SAP S4 HANA. Oracle has also the cloud financials, where your entire solutioning will be in the cloud. Next, it's like one innovative concept amalgamation into another. Blockchain for intercompany transactions. So blockchain technology could be used for all the different areas of, it's not only related to intercompany, but it can be implemented for any, you can say, it can be implemented for third party external transactions also. So blockchain is a concept and you can implement wherever it is applicable, but it has a good, you can say, scope in intercompany transactions also, because we know that blockchain technology is used to improve the transparency, security, and auditability of the intercompany transactions. Because obviously in intercompany transaction also we have this concept of you can say, like, preparer and reviewer and then sign off, okay, which is a key elements for intercompany reconciliation process, the workflow. And it can be effectively done through the blockchain, where we can create the immutable ledger of intercompany transactions, where no one can, you can say, like, manipulate the things, or you can say, like, distort the things, okay, and the data will be transparent, consistent, and it cannot be tampered. So blockchain technology can be implemented, but because I mentioned there is no specific you can say a product which you can just plug in, it's not that way. You just need to adopt the concept of blockchain into intercompany transactions there. So intercompany, you can say, a business process. Blockchain is a concept which you can implement and develop your solution there. So like you can do the prepare the decentralized ledger, you can prepare the smart contracts. Smart contracts not only is useful for intercompany, your group companies, it can be useful for your regular external parties also, your customers, your contracted sellers also, purchasers. Though in all those cases smart contracts can be used. So in many cases also, like, your organization is dealing with different banks for different financial transactions, like loans and borrowings and all. So there also you can use the smart contracts under blockchain for utilization. But yeah, our focus right now is on ICR. So in ICR, definitely you can use this blockchain concept, because two things you need to ensure. First, the data accuracy, data should not be manipulated, and then data effective review of that and sign off. All these processes are the key, you can say, the key parts of blockchain technology, where you can with this immutable ledger, you can ensure that data cannot be manipulated or tampered, and effectively it can be reviewed and sign off can be done. Then now, after capturing the data, doing the reconciliation, now more focused on analytical point of view, like advanced analytics and business intelligence for reconciliation. So we know that a number of tools for the analytics and business intelligence are present in the market. These tools can help financial team to better manage the intercompany reconciliation by providing the insight into transaction pattern, the trends, the discrepancies. As I mentioned, that in regular ERP solutions, there is no proper reporting. So there could be, for intercompany reconciliation perspective, we can have two types of reportings. One, a standard external report, which need to be published and need to be signed off by the auditor, and which is the end result basically. Another one is the internal reports, which is used for tracking purpose, or you can say see the progress, or you can say the patterns for all those, which will be actually helpful for the persons who are involved in intercompany reconciliation process for preparing and do in for that entire journey, how it is progressing, that visibility, that dashboard, all those reportings and all can be provided by these analytics and business intelligence tools. So you can use the predictive analytics, the data visualization. So we know that Tableau, Power BI, all these things can be used. Then we have this Lumira also was there. So Tableau is more or less now very much popular. Power BI is also very effective tool for last few years, many years in fact, where you can prepare different types of internal as well as external reporting dashboards, as well as reporting reports, which can give you the visibility during the process as well as the final visibility at the end of the process, that what is the end result are there. So those kinds of things, like these tools can be used to prepare effective reportings, which is very much needed right now. There is nothing inbuilt present in any of the ERP solutions. Then one of the key major, you can say it's a kind of paradigm shift, is real-time and continuous reconciliation. As I mentioned, that the regular process till now was, I will do capture the transactions. I am company A, company B is also capturing the transactions day to day. And at the end of the period, now we will start our process. And at that time, there is no way back. Like if you have captured some transactions 15 days back wrongly, now you have identified during the reconciliation process, there is no way that you can reverse that or you can rectify that. Okay. So it's like, okay, all whatever is captured. Now I need to take the pain and do the reconciliation, resolve the disputes and all. But suppose if you are in a centralized platform, both the entities, both the companies are capturing their transactions which are related, and whenever, since it's a centralized platform, whenever the you can say the two legs are captured for the same business process, same transaction, automatically it will be reconciled at that time only, on the very first day of the month when that is captured. So that way it is like whenever there is an inception, or you can say like the creation of the data, immediately reconciliation will happen at that time only. We no need to wait for the transfer of the data at the end of the period, then starting the process for matching and reconciliation. It is like whenever I will capture the data, at that time only reconciliation will happen. So that way, even if I'm not very much you can say positively thinking that 100% data will be matched automatically, no, but at least at the end of the period you will find that if properly data has been captured and it has the proper, you can say, identification, everything is in place, 60 to 70% data before starting the intercompany reconciliation process, automatically it is ready with matched status. Means your 60% effort for doing this ICR process is reduced, because you have done the real-time and continuous reconciliation already. System has done that. Or you can also do. So for example, time to time, whoever is responsible for doing intercompany reconciliation at the end of the period, let's say suppose today is 5th of the month, I just logged into my ICR solution, which is in the centralized platform, could be a cloud platform, to just check how many transactions from from 1st to 5th for these 5 days, whether anything has been matched, what is the status. So what I have found that till now 10,000 records has been captured. Out of that, 8,000, or you can say, let's say 7,000 records are ICR in nature, rest 3,000 are external in nature, so not relevant. 7,000 is ICR in nature, and out of that 7,000, let's say 3,000 is the other leg is not yet captured by the other company, so it is unmatched. But for rest for 4,000, the other company has also captured their data and it is reconciled already. So what picture I will get on the 5th of the month, just starting of the month, that 4,000 records are already reconciled and matched automatically in the system perspective. So this will give me a confidence also that, okay, so a number of records are already matching. I am getting the insights in real-time basis, so that I can do the continuous monitoring. So on 5th, I have checked, on 6th, I have checked, on 7th, so I can see the progress and all. And even if there is a discrepancy, let's say if it's a predictive thing, I have captured one transactions of 1,000 rupees on 5th of the month, and on 7th, the same transaction has been captured as 950 by the other party. On 8th, when both of us will see this intercompany reconciliation progress, what I can see that there is a transaction for which both the legs are already captured into the system, but there is a discrepancy of 50 rupees. Because he is showing 950, I am showing 1,000. So what I can do, I can start the discussion and dispute management process immediately there itself. I will not wait till the 30th of the month. I will immediately start the process. I can just set up a discussion and we can discuss that, okay, boss, I have captured these transactions from your side, which is 1,000. Why you have captured 950? What is the reason for that? So they can discuss, and whatever be the resolution for that, they can immediately do that activity also, or at least they can be ready with that. They can park that with all the evidences and all, that whenever the ICR timelines will start, we will immediately resolve this issue. So with the help of continuous monitoring, you can easily reduce the effort for the dispute management and resolution also. And then automated clearing and matching. Since we have defined the rules and all in the system, and it's a centralized system where both the legs are automatically coming, the system can automatically clear the transactions as and when it is, as per the rule, it is satisfied, and the match intercompany balances instantly whenever it is there. So obviously it will reduce the time for reconciliation at the period end. So this is very much important, that we should think about the real-time reconciliation process. Not like that we will capture, then transfer, then do the matching and all those things and all those things. No, that is the old process very much. Now the thing is like, whenever you will capture the data, at the very inception of the data, it will be reconciled for both the party. So these are some of the innovations, and you can say there are lots of other innovations are also there. I am just giving some directions, or you can say some areas where the innovations are going on, or where the innovations are very effective for ICR solutions and all. Okay, so it's like a continuous evolving process where you can like get the insight, and not only from technical point of view. If you go to any person in finance and accounts or anywhere in the corporate organization and just check with them, sir, what is your challenges in intercompany reconciliation process, they will say this process is only, nothing beyond that. And if you want a genuine solution, or you want to genuinely help them to make the system or improve the process effectively, you need to just focus on these processes, whatever technology you can use, whatever concept you can use, but you need to address these pain points, like data collection, data transfer and centralization, the reconciliation, automatic reconciliation, the effective reporting part, and then finally you can say like real-time and continuous reconciliation could be a major game changer in this area, I can say. Okay, so with this note, I am concluding my from my side. So over to you. If you all have any questions, anything, you can ask me. Thank you.
Yes, I will ask the question.
Yeah. So, sir, I have one question about the data mismatch. Suppose company A or company A records a sale of X dollar to a company B on 14th December, suppose means today, and company B records the purchase of the same amount on the next date, means suppose 15 January. So due to this exchange rate difference, there will be a there will be the manual error. So my question is, how does the organization currently identifying and resolve the data mismatches? So basically, is there any tools or software that they use to detect?
So basically, see, the point is tools and software is not the primary challenge. The primary challenge here is what will be the you can say the resolution way, how I can resolve these discrepancies. If you are clear with that,
Mhm.
then that can be like to what any tool is doing. It is doing the automation, or you can say if you give the rules, if you define the rules that okay, if there is any exchange rate difference or whatever, if there is any discrepancy, what will be the action item for that? If it is clearly defined, that can be automated there itself. So your example is related to the exchange rate differences in current I'm not thinking about the tool, but in current processes, how organizations are eliminating the factor of exchange rate differences. There are a number of ways are there. One of the ways is like averaging out. So for example, I can do the transactions between, let's say, USD and INR from first day of the month to last day of the month, and in every day the exchange rate could be different. How can you capture, or how can you factorize those differences there? One very easy process is you need to take the average for the entire month, and you need to agree for both the parties need to agree on that part, that okay, we will follow the same process. You will also take the average, I will also take the average. And if there is any you can say difference still occur, they will be reported as a foreign exchange gain or loss account. So that is the accounting principle basically. Okay, so based on accounting principle, if the rules and regulations are set, you just need to, from tools point of view, you need to just automate that rules and regulation there itself. But first and foremost thing is you need to identify how this can be reconciled, like how we can agree upon that. If both the parties are agree on that rule, then it's resolved. So that way, it's basically till now it is based on the discussion, based on the agreement, how they can identify after identification, how they can resolve that conflict there itself.
Got it, sir. Sir, that is correct. But the thing is, suppose the rules were separated by both the companies, and it will. But my question is there? I mean, means manually it is not possible, right? Means to handle the more complex transactions details. So
Manually, it is like manually possible means manually right now it is happening. So because you cannot say na, that ICR is not possible, even if it's a manual process. At one point of time, you need to come into a conclusion, both the parties. That, let's say, as I mentioned, that one party is saying that it's 950, one party is saying is 1000. It cannot be possible that both of them are like someone is like ignoring some factor and they are doing wrong way. As I mentioned, that you have provided some material and you have captured for all the 100 quantity material, let's say 10 rupees for each material, so it is 100 into 10,000. So your concept is I have sent 100 quantity material, so I will capture 100 into 10,000. You are not factoring that after sending 100 materials of 10 rupees each, when they have received that, while doing the inspection for utilizing of that material, they have found that out of that 100 material, 98 materials are okay as per quality inspection, but 2 materials are rejected. Why they will give you the money for that 2 materials, right? So what happened that they have identified 98 amount for the 98 materials. So 980 at their books. My case right now it is 1000, but later on in subsequent period, those 2 materials which has been returned to me, so there is a reversal of 20 amount, but that is on a later part. I don't know right now. So that's why there is a discrepancy, that for my case it is 1000, for their case it is 980. But when they will discuss and reconcile, that information they will give na, Why it is 980? Because you have sent me a invoice of 1,000, but when I have done the quality inspection, only 98 has been utilized. So for rest 20, I have sent you a credit note. It has been sent to you. You just check in your subsequent period transactions that you will realize. Based on their information, again, I will come back and I will check internally, is there any 20 rupees credit note transactions later on for this particular case? Yeah, there is a thing. Then what will happen? I will agree with them that, okay, yeah, that is fine. So for my case, I will write that as 1,000 minus 20. They will write as 980. Ultimately reconciled. So that is the resolution of the dispute. Now, this is a manual process. How you can do this in a tool also you can do, like, but how this dispute resolution also can be automated, that completely depends on this, like, predictive analysis kind of a thing. Like, okay, there is a 980 transaction there is a 1,000 transaction here. It seems that there is a difference of 20. Now I need to identify among millions of transactions, is there any minus 20 rupees transactions anywhere related to this case? System will search. If it is found, it will prompt for that, not automatically reconcile. It will prompt me that, okay, there is a minus 20 transaction. I can predict there is a transaction. You just check and confirm whether it is correct or not. I will confirm on that part, because anywhere, because it's a financial data, manual confirmation is definitely needed. Someone need to take ownership. System cannot do all the things and just generate. System can predict, system can propose you, but final confirmation you need to take. So when they will propose you the details, and you will see that, okay, there is a 20 rupees predicted by the system and it is correct. I have taken the decision. What I will do, I will just confirm. My effort for matching or searching is reduced, but the decision taking, definitely you need to take the ownership. So what you will do, based on the prediction, you will consider that as a transaction, both of them. So 1,000 minus 20, 980 here, 980 in other leg already it was there, automatically it will match. There is no dispute there itself.
Got it, sir. Thank you, sir.
Yeah, thanks. Any other question?
Prasenjit, I have a question.
Yeah.
So just, like, can you give some just very basic, like layman examples which everyone will understand? Like if any elimination doesn't happen properly and it gets consolidated to the group account, like what the, like the consequences of that? And just a follow-up question on that, like if, like, say, like every time it is a manual, like discrepancy, or it can be sometimes like done deliberately to falsify the balance sheet.
Yeah.
Like, do you know anything?
Yeah. It could be possible that someone can inflate their performance by getting. So for example, if you are doing any intercompany reconciliation, so it is like I am doing, in a very layman's language, if it's an intercompany process or intercompany transaction, it is like it's a business within my organization only. How it can ensure actual financial health for me, like my liability. For example, in a family, there are two brothers. Okay. Now, one brother is giving some money to another brother. Okay. The money is within the family only, right? You cannot predict the liability or the, you can say the financial condition of with that transaction, because it is within the family only. Similarly, for group companies also, it is like if I am doing the transactions at the group level, it is internal transaction basically. From company point of view, both are different entities, but when I am thinking from group reporting consolidation point of view, as a group, it's an internal transaction. Why it is why it could be a relevant transaction if it's an intercompany? So that's why intercompany reconciliation or ICR transaction need to be eliminated from consolidation, because as a group in external world means for financial institutes, stakeholders, shareholders, you want to project your financial health, that how much liabilities I have, how much revenue I have, how much is profit, how much is loss, whatever. You want to predict that. In that case, which is completely external, that how much liability means to external parties, how much I need to give, how much assets I have, that as a group, I have total this amount of assets. It could be machineries, it could be liquid. Then how much profit gain, all those things can be derived from there. It's completely external reporting, group consolidation, group reporting. Now, since ICR is an internal transactions, from group perspective, you cannot report that in consolidation. If you are reporting that, it means you are falsifying that, okay, there is a, not from transaction point of view, but there is a deal where this much amount of money could be liability, could be a revenue. You are inflating both the information, right? So with internal group company, you are doing a transaction and you are showing that as a revenue from group perspective, which is wrong because it's an internal transaction. When you are, like, somebody is saying that my monthly salary is 10,000 rupees, but when you are checking, it is actually like they are getting some what I can say, monthly expenses given by his father to him. So you cannot show that as your income, right? It is like they are giving some money to you for your expenses, monthly expenses, but it is not your salary or income. But in external words, to your friends and all, you are saying that, okay, I am doing some jobs and my salary is 10,000 rupees. So it is something like that only. So it is not a salary. You are not doing any external work or anything because of which any external party is giving salary or amount to you. It is like from your father only you are getting some money, which you are showing something like, yeah, see, I am earning something. And based on that, also what you have done, you have shown that from your father you are getting 10,000 rupees every month, and that you are showing, and then as a you can say like salary. And then based on that, you have lent money from different your friends and all, that, yeah, I am getting salary, I will give you money, please give me some more money there. So it's kind of a fraudulent activity, right? So that type of inflated transactions and activities are also shown by the organizations purposefully. And it could be, will not say accidentally, because whenever you are doing intercompany reconciliation, elimination is a thing. You need to be very much accurate in that. You cannot say that, okay, it's an ICR transaction, but I forgot to eliminate that. It should not happen, because, and it doesn't happen generally. Why? Because multiple agencies are involved there. Even if you are doing a mistake, the other party will definitely not a mistake in that case. Auditors are also there from external third party agencies. They are doing the proper audit. They will check the transactions and only then they can confirm, because their stake are also there. They are signing off as an auditor that everything is fine. So yeah, purposefully if you do, definitely you can include, you can like bribe the auditors also in that case. Those cases happened already. But I don't think accidentally it will happen that you miss something, because it's a very basic of the regular financial activities there itself.
Got it.
Yeah.
Anyone having any other questions? Okay, thanks, Prasenjit. It was a great session. I think, like you have explained it also, no one is having any question.
So my only request to everyone is, don't think from technical point of view. See, tools and techniques, these are the ways. Definitely you need to learn the things and all, but think from the process point of view first. That what are the current pain points, and what exactly the processes or the areas where we need the tools to act upon, like where automation is needed, what processes I can automate, or I can do the predictive analysis in those cases, how I can effectively improve the solution there. Because if your solution is doing some of the things automatically or effectively, it's very easy to like convince the users. If they get the flavor that, okay, these things are automatically done, this is my day-to-day pain point, and now I no need to do these things, they will opt for the solution and there. So technology is not it's important, but it is not the primary driver. You can use any concept, blockchain, AI, ML, anything, cloud technology, Power BI tools, anything you can use, Lumira apps, Tableau, whatever suits you. But if you are addressing the pain points, if you are addressing the existing the challenges in the process, then you are you will actually addressing the issues there itself, and then only the effective solutioning can be done there itself. Okay.
Thank you so much, Prasenjit. We will pull you in some other sessions also, like some more sessions.
Yeah, sure, definitely, anytime.
Okay, thank you so much. Thanks everyone for joining. Have a great
Thank
day.
you. Thanks, everyone.
Thank you, sir. हरिओम।
हाँ,
रिकॉर्डिंग वो सिर्फ मुनमुन बंद कर सकती हैं क्या, हम लोग नहीं कर सकते हैं?
हम सब लीव करेंगे और वो बंद हो जाएगा।
अच्छा ऐसा है, ठीक है।
ठीक है।